Good afternoon. If anybody has their alerts on, you're here with me. I'm gonna close that. And oh God, Tesla. Let's talk about Tesla. Do not. I'm going to start my, let's see, we're going to start up the podcast, delete that, move to trash, we're starting this up, move this back, I need to move this over. We will push our notes back up. Let me start watching. I'm going to start watching on YouTube so I can see what's happening here. It's the afternoon, so I don't think anybody's going to join, but if you guys do, hit that thumbs up button. If you watch this. D-Man's one of our afternoon people, I think, that comes on. So let's do some scans. We're right after 1:30, so I'm going to look at the current candles. This is TrendSpider. There's a link to this in my description. It is a charting program that essentially my algorithm is housed in. So if you sign up for a subscription, you can get access to my algorithm. I'll just give it to you. We also have a 65-minute algorithm that is a day trading algorithm. I'm going to look at core investments. Nothing in the core investments crossed up. Let me see in my brokerage holdings. One that I want to look at is... yeah, Google, man. Google, if you don't have a position in Google, it's not a bad time to get into a position in Google. Ironically, a lot of our core holdings are up today. I'm seeing Cleveland Cliffs up slightly. Coke is up. Under 60, buy Coke all day long. Simple as that. Under 60, buy it all day long. NVIDIA is up 2%. Let me go to Earnings Whisper because I want to see calendar. After the bell, we got PayPal, we got Lyft. We got PayPal's probably a good one. Let's see. We're going to say earnings after the bell. PayPal, Lyft off of Uber. Lyft might be a good one. Expedia, EXPE, Aurora Cannabis. That's an interesting one. Mesa Pine. When is NVIDIA's? That's what I want to see. We have nothing in the brokerage holdings, so we'll go to NVIDIA. NVIDIA's earnings are February 22nd. Okay, we did the brokerage holdings. Let's look at energy names. Anything on the energy sector cross up? Nope, nothing on the energy sector. Levered ETFs. And we're looking at the afternoon, by the way, so it might be... slightly less than the morning. This is the 65-minute, or I'm sorry, the 4-hour. I could look at the 65. Not owned. And this is my own personal watch list that I'm looking at. Hey, Hung. I wrote in the private Facebook group, man. I did a 12-mile hike this morning. Then I was out. I just bought Google last night at $99. So, I think I've said it before and I stick by it. Anything under 100, here's what you've got on Google. And we'll look at the algorithm real quick. I'll switch over here. And Hung, I think you got like a one-on-one session here with me today. So remember, Google was a buy here from 88, and I talk about all this time the button hook that happens. I bought up here because I saw the button hook, and I said, once it crosses 100, I wanted it. So I bought a couple $1,000s worth. Here's this red volume candle. You're seeing the MACD crossing down. The reason the algorithm hasn't gotten you out, it will get you out in this afternoon candle today. That's typically, I don't typically like to buy until it crosses up. I bought a small portion. Full disclosure, I probably want about 15,000 in Google. In a new position, I already own 6 figures in Google. So I'm just starting a new position. But you can see this candle right here, the green one. This is the morning candle. This green one right here. It's in a tight trading range because that green candle starts at 130. So it's just started up at 138. My guess is, as you're putting in here, it's covering this gap, 94 to 95. I think you put in, if you want to talk about getting down to where the support laid in the back here between 88 and 91, you could wait for that. But at $15,000, I put $2,000 in last night. That's essentially, and I bought it 99. Am I concerned about this? Here's what you have to worry about with Google, and I'll kind of go over it, is that Google, the AI business that they are looking to get into could cannibalize their current search business. So, for instance, you go to Google now and search for a restaurant in the area, and you say restaurants close by me. Right now, you're served up a bunch of ads up top. With AI implemented, the ads will probably not be the first thing that's served up. Artificial intelligence will go in and understand what kind of food do you normally eat? Where do you usually go to eat? So the question is, those ads that are served up, they may be more specialized, or you might just see full AI where they're just sprinkling in ads in between. It depends on, the market is going to dictate what happens. If Bing all of a sudden gets better and they don't have as many ads as Google does, boom, cannibalized your business. Google is going to lose to Microsoft. That's why I like having all of these tech plays in here. Google's down 5% today, though. Make no mistake, 5 years from now, I have no doubts in my mind you'll be extremely happy that you bought Google. Now, will there be others that you're happier about? Of course. Of course. Wow, we really took a leg lower here. It doesn't look, the VIX is up at, the VIX is at 20. It went up. Amazon's down below 100. This one, you're seeing the button hook of all the tech. So I said it before, and I said it a few days ago. I think, and others say, the 15th of February might be a bottom for a lot of this stuff. So, Unity Software. That has been a bull. I don't want to send people into that. It's up 12% today based on earnings, I believe. Nope. They did announce something, though. Let's see. Unity Software. January 12th, underperformed $19 after supersonic updates platform from mobile game developers. Bazinga. Supersonic from Unity makes significant updates to its platform, providing a quicker path to game growth for mobile game developers. So you can see you've got a gap here between 36 and 39. I say it all the time, and I hope people remember this. Hung, it depends on what you... Part of the podcast today is going to be do not listen to some douche on the internet. I get too many messages in the private Facebook group about, well, someone said this in this group, and I lost money. It's not the person in the group. You didn't do due diligence, and did you lose money in the short term? Do you have, hope and pray that it goes back up is not a strategy. It's not a strategy. Got to have pretty clear strategies in a market like this, specifically if you're betting on these triple levered ETFs. And Hung, realize I'm one of these douches on the internet. I say Google is good. Other people say Google is good. I tend to think that, if you look at a weekly chart here of Google, the last time it was at the 200-day was COVID. And then it shot up from there. Again, over the history of this stock, that was the best time to kind of buy in. This is a weekly chart. I mean, we can look at a quarterly chart, which will even push it back further. You don't even have a 200-day, but you're sitting right there on the 21-day, and this is a quarterly chart, so it's quarterly. But the RSI is down at 55 on a quarterly. Your MACD's just kind of crossing down. Doesn't have a huge history. But you go to monthly, and you're still kind of just in that no man's land. You go to a weekly, and then we'll pull this back. And you're kind of in this, again, no man's land, kind of just using that 200-day at 96 as kind of a point of reference, if you will. If we look here, when we pull this volume over here to the highs, you know what? We'll go back to COVID. Who's holding from the COVID lows? So you pull it back to the lows here, and you look, and you've got this volume kind of level here at 86, 87, which is providing its bounce up. This is where most people seem to be holding. You have a significant amount of people down here at 70, between 70 and 80. So, again, don't listen to some douche on the internet, Hung, but I personally did buy. That's just my thought on it. And I don't have to tell you, Apple's always a buy. I think in this core portfolio, and I think I sent you the core portfolio, there's only a few that I've changed out. I put in Uber, I put in Taiwan Semi. I'll talk about Tesla. Tesla is, look here. It's a $400 stock back here, December 2021. Tesla's just rebounding from where it should be. It's a money-making machine. They basically have cut the price. And so, all the way through this rise, Tesla there's been naysayers on every side. You're just getting, Elon's going to be focused on the second Elon leaves this business, he knows it's under. But the Model Y is the number one selling car in California. The Model 3 is the number 2 selling car in California. You have the number one pickup market being California, and they're going to release the Cybertruck. You've got all of these upcoming catalysts that will spur growth, will spur a bigger stock price. So I don't know that 100% Tesla is doing it all on their own, but if you look at how far it's been beaten down, this is still a viable company here. You know, it's probably going to 300 at some point this year. So, yeah, all last year. Great point, Christian. All last year, from January 2022 all the way to December, and you can see how it slid down. And this is a weekly chart, so each candle represents 1 week. I guarantee you the lows on these are when Elon was selling. Great point, Christian. In big chunks, people don't sell this in big chunks. Cathie Woods buys. The only reason she sells is because she has to rebalance her portfolio. Hey, Dawson. God, you guys are degenerates all freaking day long. I hope you people went for a 12-mile hike like I did. Hold on. I got to go to the group and then Tanner says thank you. I like when I get thank yous. Yeah. I mean, that's a perfect analysis. When people ask you why, it's you know, Elon was selling everything, and God, I almost showed you guys my portfolio. I don't want to show that live on YouTube. I think I showed this before. Understand your dividend history. Pre-market movers. These are 5 day trading strategies that I was going to try and do, but I'll probably just do the podcast. Okay, let me get back to scanning. ARK Holdings, I'm not going to do any of those. Let's go to the Dow 30. Let's go to the NASDAQ 100. And by the way, we're scanning on the afternoon candle, not the morning candle. So it's probably significantly less. Yeah, but God, Hung, Mara, and Coin, they look sad. I mean, I'll look at them. They look sad today, but go and look at a bigger, longer chart. Oh, wow. Energy. Big cross-ups in energy. EQT. And Taro Resources. I don't like that chart. OVV. Don't like that chart. EQT. Isn't this natural gas? Let's see. Oil and gas exploration. Operates as a natural gas production. Yes. Ooh, look at that chart. You don't need TrendSpider to look at that chart. So you have a support level down here at 29, and right now it's trading at 31. It bounced off that support, and they report earnings next week. And you've got a gap up here at 37. Oh, put that in as a scan. I don't have much, so I don't think EQT's bad. They are earning money. They have a high multiple at 6. For an energy company, that's a high multiple. 2% dividend. Down 7.9% year to date. They're right in the middle of their range. I don't think it's horrible. Not holding it, but you could trade it. Come back up to, it's got confirmation above the 9-day. Mara is one that you could play long term. Here, we did the energy sector, so let me go back to the strategy tester, and I'll go to the 4-hour, and we'll look at Mara. Here's the thing about Mara. If I go back and I look at a weekly chart of this, Mara's been around for a while. Ever since 2014, and this is when they were trading at 56. They're at $6 right now, Hung. This is a company that probably, and I want to be careful how they say this because I do think it's a good company, and their processes are strong, and I understand what they're doing. They're basically mining cryptocurrencies, and they're providing the backbone for the cryptocurrency. So they get paid, and they optimize their stuff. I like them, but you can see like this one, they lost $2.28 per share, 38% per share. They made 85 cents. This is 100% a crypto swing. And I think when you're down, I've said when you're down here at 3, it makes sense. But you go back here to 2020, and you were down at 41 cents. It makes sense to buy there at 3. It makes sense to buy here at 6 and ride it to 16. As long as you have confirmation. And it depends on, and if you're doing long term, that weekly, you don't have confirmation. Even here on a 4-hour. You haven't had confirmation here since February 2nd. And even then, it was kind of a weak confirmation because it just started to go back up. So it wasn't a super, and you can see the 200-day provided resistance. So if I were buying here at 613, I believe that my upside is only $8. I believe that my downside is $3. You could put in some type of support here at $6 and say that this right here with a weak inverse head and shoulders, a weak one because this shoulder's freaking huge. But it doesn't hold that 200-day very long. Now, Coinbase is a different story. Coinbase's model is basically like a bank. They're regulated and they have funds. So if somebody buys Bitcoin, they have the funds to provide that Bitcoin to them. So their likelihood of bankruptcy is significantly close to zero. This one at $30, it just took the crypto hit. I mean, honest to God, it just took the crypto hit and everybody thought it was going under, but it's a bank. They were trying to differentiate themselves. They were trying to say, hey, we're not FTX, blah, blah, blah. So it went all the way up here to 84. I mean, that's just a crazy. 85.54 is the high here. 87.63 is the high here. And if we just pull it back to the last time it kind of crashed, this is where people are holding. It's probably coming down to 58 here, I would think. And then it will probably hit 54 and use the 200-day as support level. But that MACD is just too high. Their earnings are coming up February 21st. If you want to roll the dice, I don't think it's a bad thing to do. But, okay, I'm going to go and do my thing and record this podcast because I've got a semi-sick dog who probably needs to be taken care of and just cuddled and handled. Okay, we're going to go. Yeah, we'll look at those too. We'll say earnings. Oh, there we go. I've got it now already in PayPal, Lyft, and Expedia. Those are the ones that I like. There's an interesting one here, but okay, we're going to start out this podcast. Yeah, I'll look at Boyle. I'll put in Boyle in there. Christian, here's what I think about ATVI. You're rolling the dice because I think if the EU says it's not allowed, I think at $3 billion, Microsoft says, you know what? Do we want a protracted fight or do we just want to pay the $3 billion? Because they won't be allowed to do it in Europe or in England. So they'd have to run it as two separate companies in England, break it up. It just gets messy. I don't think you're wrong in that yesterday, you look at yesterday, February 8th, the morning candle down here, and it went all the way down to 72.51. I think you're right because if I look at it from this standpoint, you just drag this out. And again, it's 4-hour candles. You do have this gap from 65 to 75. Hasn't been filled on the way down. You can see how it's kind of just put in its 70 to 71 kind of base there. I think you're right in that 70 to 71 is a great floor. If it gets to 77, I would say there's your 10%. You might want to think about pulling out of that one at that point because I do think that there's a clear, here, I'll just put it in. There's a top at about $81. I mean, it hasn't been able to hold above that at all at 81. We can pull it out. I can go and look at a daily. Let me remove this. Remove all annotations. Even if I look at a daily, I think you've got a clear top here at about $81 to $82. And until it gets above that, I just don't think that you get, your floor here is 65. I think if you break the 70 mark, I think you clearly are going down to 65. There's nothing in between to sort you out. You pull it back here to where kind of Buffett. There's nobody holding down here. There's just nobody holding down there. You pull it back here to where it was trading in December at 57. There's nobody holding down here. So I think a lot of these people, you've got the value of these people who have been in this for a year since Buffett kind of put his money in, since Microsoft announced it. I think that's a great one. Okay, let me hit record. Today I will say good afternoon. It is Thursday, February 9th. I did 12-mile hike this morning. I am on YouTube. I got a couple of, hey, where were you this morning? Well, I posted in the private Facebook group that I was going for a hike. I was trying to beat the rain. So if you're not part of our private Facebook group, go to the link tree down below. Hit under my picture. There's a Facebook logo. Just go and hit that. I think I posted it on Twitter as well. Hit the Twitter logo. Follow me. Hit alerts. Do whatever you need to do. Just make sure that if you're one of those people who misses me, you have the socials so that you can do it. I did have people join because they have the alerts on YouTube. Just remember, I always say this at the end, but I'm going to say this at the beginning. Gentleman's agreement. Just if you're listening, just go to YouTube, hit subscribe. And how do you find my YouTube? You go down below to the link tree and you just click on the YouTube logo or go into the words where it says, there's my YouTube. Boom, click on that, hit subscribe. I don't care if you put on alerts or not. Alerts are interesting if you're interested in quote unquote trading with me because sometimes I'll pop on for earnings and things of that sort and trade. But that's up to you. Just the subscription will mean a lot to me. So instead of tipping me, just go subscribe. That's all I'd ask. First thing I want to bring up is I've gotten a lot of emails and a lot of regrets. And the emails are, this person posted this. I listened to them. Should I hold on to this because it's a losing position now? Well, first rule, do not listen to somebody on the internet. If I give you some strategy and you like it, take the trade. That's the first thing. If there's a reason for you to buy this other than somebody told you to, then buy it. If you're just buying this because somebody told you to buy it, do not buy that asset. Do not spend your hard-earned money. I know people who will tell other people to buy cars that are out of their price range just because, well, I have that car. It's, it's great. I live in that neighborhood. Go buy that house. It's not a strategy. So do not do it. I am sorry that you listened to somebody on the internet, and I am sorry that you actually lost money. It doesn't make me feel good when other people are texting me that they've lost money because of somebody. But the other thing I want to tell you is make sure you understand your risk and make sure that you're sizing your risk. For instance, this is a great for instance because it comes up at this time. Google had their AI demonstration yesterday. It went horribly. I don't know the details. I haven't read the details. I don't spend my time looking at a lot of things specifically as far as the details go. You guys know I have ADD, so I headline read. But it went horribly. There was something about the James Webb Telescope where it just went horribly. I liken this to when Watson was playing in Jeopardy. IBM is Watson's AI, and that's been out for years. And it was playing all of the contestants in Jeopardy. And Ken Jensen, I think, was one. There were several others. All of the humans got wiped on the floor. But there was a final Jeopardy question about something about a gas station or something like that in the U.S. And the specific point in the question was in the U.S. Well, what did Watson answer? Watson answered Toronto. And so Watson basically lost Final Jeopardy. But you know what Watson did? Watson said, sizing, I'm just going to, a couple dollars. Won the episode. Wiped the floor with everybody. Watson just got Final Jeopardy wrong. Everybody else got it right. But they couldn't catch Watson. So that's essentially what I want to do. Do not listen to someone. I feel horrible when I get these emails, by the way. And don't, you can send me the emails. I have no problem listening to you and understanding. I want to teach you. So one of the biggest learnings is when you lose. But I go back to Google. I bought Google last night at $99. Google right now, and right now it is 2:00 on Thursday, and Google is at $94, I think. Let me see where it's trading. $95.23. It got all the way down to $93. It's a losing trade for me right now. I'm not upset about it because when I entered the trade, I said, it's not a day trade. Google's going to get this right. Google's going to find a way to make this happen. I want to put, I think I said this on YouTube and I probably shouldn't have. I want to put $15,000 into that. Well, I bought $2,000 worth last night. Big deal. So my entire position, I want $15,000 in. I'm going to buy on the way down. $99 was a great entry point for me. $93 is a better entry point for me. I may buy at $95. Looks like the market's trending up. Right now, it's got all the confirmation in the world. Looks like it's moving up. Yeah, I'm not going to buy into strength. I'll buy into weakness. Last night's buy was into weakness at $99. It was significantly down. So another question is, why is Tesla moving up? Tesla defies all odds. Tesla will probably go to 300 before it hits the 85 that I thought it was going to hit. Am I looking myself and oh God, I really should have gotten into Tesla. That's FOMO. That doesn't work. If you really believe in something, then buy it. I bought last night Disney. I bought right before earnings. Small position. I know I want to add to that position, But right before the bell, I think I got in at about 111, 112, somewhere in that neighborhood. It's at 113. It went all the way to 120 yesterday. I almost sold at 120, just saying, maybe I'll take that. I do think that we get back to the 100 handle. So I think 105, 109, 101. I do think that we get back to there on Disney. That's just me. Small position. Bob Iger has said he is going to reinstate the dividend at some point in time, and he believes that maybe this year. So I like it. He's laying off 7,000 people, and I saw Jim Cramer kind of, this is the way, I hate people getting laid off, but Bob Iger is going to be the business, blah, blah, blah. Well, dude, you can't include a happy kind of thing that you're happy about Bob Iger doing it and 7,000 people losing their job. It's a horrible thing. I went for a hike today with somebody, and one of the things that I said is, hey, you're middle-aged. Just be aware they can cut you at any time, so make sure you have your savings in line. And this particular friend is completely fine, not worried about him whatsoever. He's doing great. But yeah. So Disney and Google, again, I didn't buy because somebody told me to do it on the internet. I bought because I found a price that I was comfortable with, a multiple that I was comfortable with, and I bought it. Disney's a little bit up higher than I actually want to spend. Disney's PE right now is 63. Their forward PE is 21. I think that the business Iger basically is showing that they've been spending too much money. 7,000 employees is a lot. They have 220,000 employees worldwide. So it's just kind of a drop in the bucket. Year to date, this one's up 30%. That's why I say I do think that I'll probably have a chance to buy a little bit more between 100 and 110. But I'm happy buying this. When you look at a long-term chart of Disney, and I should have bought in the 80s back here in December 27th, and I'm buying into strength, but I'm buying a small position. When I look at the weekly chart of Disney, and I look at we're at levels that we were during the pandemic, when you didn't have Disney Plus, when you didn't have the parks open, and you look, and prior to the pandemic, you're a $140 stock when you didn't have Disney Plus. Now you do have a lot more debt with the current company, but I think they take advantage of their intellectual property, and I think they take that back. So, I talk about Netflix a lot when it comes to streaming as well. It's the only company that's actually making money. We had a buy-in here at 290. You've got gaps down below between 323 and 330. That's kind of where I'm looking at this one. They don't have the history that Disney has. They don't have the parks that Disney have. They don't have the intellectual property that Disney has. But when I look at a weekly, we're just heading up to the 200-day. We're getting up to 363, about 403, 400 is the 200-day. You didn't even go under the 200-day during COVID. COVID sank this one, and it didn't touch the 200-day. So as a well-run business, I do think, could you buy into this? Long term, I don't think you have a problem. Short term, I'm not touching it. Tesla, you look at Tesla and we look at the short term. We look at our algorithm on Tesla and God, I should have bought in at 119. I'd almost be doubling my money right now. Yeah, you're just getting above the 200-day. You got a gap down here at 154 to 147. You have the same gap between 258 and 263. Right now, you have all the confirmation to fill this gap. $211. Wow, that's super expensive. Well, go and look at a weekly chart of Tesla and take a look at the weekly chart. All you're doing is you're coming back up. You're only about halfway up to where the recovery kind of support comes in at about $300. So at $400, that's your high. November 22nd, 2022. It's the week. It was high. You basically, the only time when you collapsed under the 200-day was the 2018-2019 slide. And that just, you had that slide. I was in the stock at that time. I got out of the stock at that time. God, I wish I would have held. So don't play FOMO. Don't listen to someone on the internet. Do the work and understand where you're buying into. I am not in Tesla. My belief is I don't want to buy into strength. I'd rather buy into weakness on this one. At some point in time, this comes down. Year to date, this one's up 71%. Disney is up 30% year to date. I was comfortable buying into strength on that. Not at 71%. You're 45% below your 52-week high, which is 384. You're 107% above your 52-week low of 101. 101, clear as day, you should have bought. So, again, lessons. Do the work. Understand what you're buying into. That's how to use this podcast. It's not, hey, Gary told me to buy this. No. 100%. I'm giving you ideas. I'm letting you make the decision. If you want to follow me, that's fine. Understand why you're following me, though. And that in that respect, I'm doing what I need to do, which is just, hey, here's some ideas and go and buy it. We're not in competition with anybody. There's nobody who's going to compete. Nobody. And if you are competing, good for you. I'm not. Here is Pepsi. And I said, hey, Pepsi under 170, buy it. Buy it all day long. I do think that this 164 to 166 gap, it's there. It bounced right off the top end of that gap for some reason, which probably is going to provide you support. They announced they beat on both the top and the bottom line. They raised their dividend and announced a huge buyback. They raised their dividend, I think, by 10%. I would be buying this on dips. Today, probably not. I would probably wait for a 1.6 handle on this one. It's not too far away. I mean, you're only trading at 172. Are you going to be upset if you buy it at 172? I don't think so. This one is a little bit expensive in that when you look at Pepsi, they have a 24 PE, and we can look at Coke, and they have a 26 PE. So I do think that both of those PEs are a little bit high, but these are solid businesses. Coke has a 2.95% dividend, and Pepsi has a 2.69% dividend. I own both of these in fairly large allotments. I mean, we're talking probably close to $80,000, $90,000 in each one. I just split them up. Your boy here is addicted to cola. Absolutely 100% addicted to cola. I don't care if it's Pepsi. I don't care if it's Coke. I drink RC. Okay? I will drink Publix cola. I will drink any cola in the world. That's why I have both of them. I don't have a preference. If you like Coke over Pepsi, buy KO. Stay away from PEP. Just a personal preference. Let's see. I'm going to start on my notes now. Farmer Jim Lebenthal. I like his investment strategy. He has been a bull all the way into this. He got a question yesterday about rig, Transocean. Brought up some good points. He said that a lot of these, the rig is bringing up oil, and they're filling up their oil tankers, and they have some pricing power. His suggestion was buy it on a dip. He said he wouldn't buy it into this run. He'd buy it on a dip. I think that's a good suggestion. If we look at our 65-minute algorithm, which is our day trading algorithm, and this one is in the video that's on my YouTube channel, it is a simple buy over the 8-day EMA and sell when the price goes under the 8-day EMA. Right now, it is 742 is the buy-in on that strategy. I will tell you that you have quite a bit of move on this. Now, the deep candle, I won't use the deep candle on this one. We'll go 1,000 candles. And just so you know, on this algorithm, I timed it out. 1,000 candles on the 65-minute chart is 142 trading days. So it's almost 6 months. So 6 months on this one, the algorithm makes you 61%. Buying and holding the asset makes you 71%. So that's, I think I agree with Jim Lebenthal. I think I'd wait for a dip. My guess is if you get a dip back here to the 6 handle, $6, I think you could take it. You do have this gap here, but this is on the 65-minute. Let's go to a 4-hour. Let's take a look at a 4-hour because I did see a dip in the 4-hour, I think. Let's run this algorithm. Let's see. Let's run this one for Yeah, 483 was the buy-in. I don't see that gap. I do see a little gap, but it's filled in. So you do have confirmation on the 4 hour. If we go to a weekly, and I kind of look at this one, yeah, you're a little bit expensive. It's over the 200 day. It's the first time over the 200 day since 2018. It's expensive. So I like Jim's suggestion. The one that he suggested that I thought was super, super bullish was our favorite bank, Citigroup. Citigroup on the current candle has you out with a 14% gain. So you're not in there. Jim Lebenthal likes this one on the weakness, and he specifically said for the PE value, you're at 7 on the PE. The book value on Citibank is 92. He believes you can double from here, and I believe that's because he thinks they will probably go to book value at some point in time. You look at Goldman Sachs, and obviously Citibank is different from Goldman Sachs. Their book value is 307. They're trading at 372. Look at Bank of America. Their book value is 29. They're trading at 35. Look at JP Morgan. Their book value is 86. They're trading at 141. Citibank is the only one of the major banks that I could see that's trading under its book value, and it's significantly under its book value. And there's a reason it's under its book value is because it has been run so poorly. He thinks it could double. He thinks it could get back to its book value. It is a long-term trade. Understand that the current MACD 4-hour strategy has us out at 50. I'd like to see you with a 40 handle on this one. But I do think that I liked his play on this. So I really liked it. A couple of chips that they brought up, NVIDIA. I heard there's a super chip that's getting ready to come out in Q2. I don't know too many details about it. You can probably read up on it. Ironically, this 4-hour algorithm has you in at 143. You've still got confirmation up here at 225. It is just a crazy runner. I'm not buying it at these levels. I do think if you see a pullback to the 100 handle, I think you absolutely 100% take it. I don't know that chips are all of a sudden that NVIDIA is out there. This is part of the AI move. Understand this is part of the AI move. And NVIDIA releasing a super chip in Q2, AMD has said they will also release a similar chip. So you could take the look at both of these companies. Now, AMD is not as strong a move as NVIDIA has had. You had a buy-in here at 64. You've got gaps all the way down on this one. You've got declining volume. They've already announced their earnings. NVIDIA earnings are coming up later this month. But I wanted to put AMD in there. It's above the 200-day. That 200-day is moving positive. You had this golden cross. You kind of got this button hook happening here, but I think you're setting up here for some support at the 80 level. I do think that 75 is probably a better buy-in for this one. So Capri Holdings, CPRI. I never talked about this one. I never heard about this one. They released earnings last night, and it was just a shit show. Absolute, just horrible. The RSI is down at 24. I heard folks, and I've read of folks that say down at these levels just makes sense to buy. Just makes sense to buy here at 40 and wait for it to go back up to 60. You can see the volume shelf right here at 60. Where is my volume? I think it's way back here. Let's pull it back closer to here. You can see right here at 58. You're trading at 49. So essentially, again, the quarter was horrible. Wait for it to have some confirmation. Right now, look at that 9-day. You are so far below that 9-day. But as we move on, I think you could look at it and potentially move this up. Now, if we run the 65-minute, the day trading, I know you're going to be out because it's going to have a couple of candles down here. But are they coming back? Yeah, you're still out. There's still no confirmation even on a 65-minute candle. But I do think when you see it up here between 56 and 60, I do think that there's an opportunity to maybe buy into this one just on weakness. I wouldn't buy it here. I'd wait for it. and wait for the confirmation, but I did hear it, so I wanted to bring it up. D-Man has been talking to me about Home Depot. He has a ton of Home Depot stock, and where do I think Home Depot's going, blah, blah, blah. So let's take a look at Home Depot stock, and I'll take a look at it against Lowe's because those two stocks kind of trade right in line. But here, Home Depot, ironically, on this candle, it gets you out with a slight loss, a 1% loss. You rode all the way up here to 340, it looks like, 334. $340 was the high here on this one. I would say this gap here at about 288 to 297. Remember, it's under the 200-day, so it's not as big a magnet. I've always liked Home Depot closer to 300. I don't think that you should sell at 317. I do think you'll probably get back to the 320 mark. If you need cash, I don't think it's a bad place to actually sell because I think at some point you get back down to the 200s. The 52-week range is 264 to 367. So you're right in the middle. The PE is 19. The dividend's 2.37. So far, you're flat on the year. It's up 0.65. I don't think it's a horrible stock. I don't think it's going anywhere. Lowe's, on the other hand, PE of 20. What was Home Depot's was 19. So Lowe's has come up. I mean, remember, Lowe's was a PE of around, I think, 14 or 15. And Home Depot was always around 20. So this one's come up. You got a 1.97% dividend year to date. You're up 5.3%. This one's kind of the same thing, around 200. I think anything under 200, you buy. Anything over 200, you could probably sell. Home Depot's the 300 mark. I mean, that's kind of your thing. I don't know that you necessarily, I mean, listen, it's spring. Let's take a look at some seasonality for Home Depot. Let's go back. This is 9 years. Let's go back, see if I can go back to, we're going to go all the way back. I can go all the way back to September 1981. So September, this is 41 years. And this is monthly. So if we take a look at monthly, February is a pretty good month, 57% win. March is an even better month, 63% win. April is an even better month, 68% was positive. So, again, you've got some positivity. The weakest month looks like it's June and September and January, ironically. So maybe you're getting ready to, spurt on some growth in Home Depot. Again, that's 41 years. If we change on here to week of the year, let's take a look at the week of the year. So we're now in week 6, 55% of the time over, this is just 19 years. Can I go back even further? Let's see. No, it only December 2003. So 19 years. So 55% win on the current week. Next week, you go all the way to 68% win. And then you're in the 50s until you get to another week 12 of the year, which is 68% win. Then you get all the way to week 16, which is a 74% win. And that's the highest of the year. So if I were to look at the seasonality and say, okay, when am I selling? I'm selling in week 10. You're in week 6 right now. I'm probably selling around maybe even week 8, week 9, depending on where you are on your chart. But seasonality of the stock, that's probably where I'm going on this one. Again, Home Depot, I don't think he got huge moves in this one. They're not coming out and saying, hey, we got a debt problem. Hey, we haven't sold enough shovels. But I think it is what it is on Home Depot. I think it's, it's a fairly expensive stock for what it is. But it's not going anywhere. So let's look at Boyle. Hung asked me on YouTube to look at Boyle. Here is Boyle on our 4-hour algorithm. You've got a bottom here. It definitely is putting in this capitulation. The volume is trending up, but the price has been trending down into that volume. We looked at price strategy on the last thing. And when we saw volume going up, but pricing going down, that was look for sell opportunities. That wasn't look for buy opportunities. Right now, we're seeing volume kind of level off, and we're seeing this capitulation here. The question is the next candles. Right now, you're still not over the 9-day. I'm not comfortable enough to say go in and buy it from a weekly standpoint. But let's take a look at the 65-minute on this one. 65-minute on this one. Let's see where we're at. It's going to paint it. This one, it has a buy-in here at 613. You're trading at 593. Now, here's the thing. You can see all of these entries. You only see 1, 2, 3 wins. So this strategy is not a winner. Now, if we go to a shallow, I'm going to test this to see 1,000 candles. Remember, 1,000 candles on this 65-minute chart is 142 days. It gets you in 81 times. Your average win is 10%, but you only win 25% of the time. So are you willing to take a look at all of these losses on the way down and say, yeah, this is the one time it's going to win for me? When 613 was the entry, and all of a sudden it's at 592. So I'm not willing to time it. KOLD, on the other hand, has just had a monster of a run. You look at KOLD, and if we look at this on the 65-minute candle, right now on 1,000 candles, this wins you 75% versus you get 217% just buying and holding. Your average win, again, just like Boyle, KOLD has an average win of 10%, but you win 40% of the time. So you almost double your winning percentage just on KOLD. But of course, we know in 6 months, KOLD has had all the momentum. Until that momentum gets done, I just, again, I don't know how many times I can tell you guys on the chart, I think Boyle goes down to $2. It's, can you ride it for, $6 to $10 in a short term? Absolutely. But there's better places to bet with your money. For instance, just put the money into Google. Google is something you don't mind holding. When you lose money on KOLD or you lose money on Boyle, remember, you're not buying an actual asset. You're just betting on the futures price. So there's nothing of value behind that buy. And if your thought is, well, I'm just going to buy it and hope that it goes back up, it's a decaying asset. Sorry. Google is not a decaying asset. Apple, Amazon, not a decaying asset. So be aware of what you're buying, why you're buying it. And if you're gambling, the Chiefs on Sunday. Jim Cramer's rooting for the Eagles. Just buy the Chiefs. It's just as good. Again, this is a 40% win on KOLD. You got a 20% win for 10%. You got a 50% chance win by just betting on the Chiefs and the spread. I mean, go ahead. Try and the correlation between those two is just as much. So that's why I think a few weeks ago when we were looking at YouTube Live, and I was telling this woman's quote unquote team has a sports bettor. That's why you have a sports bettor, is because when you're playing these kinds of things for day trading, it's all it is. It's just betting. You're not buying an asset of any value. You're just betting. A couple of stocks that are having earnings after the bell. PayPal. Boy, this one's weak. And this is the 65-minute candle. It got you in, 2 days ago? Yeah, 2 days ago at 82. Got you out with a 2% loss. It's still on the downward side of the 9-day. You have no confirmation. When we go to the 4-hour candle and we look at the long term, I own PayPal at a significantly higher price. I have not done a good job of buying into this one. And the reason I haven't done a good job of buying into this one is just because I don't think it's at its bottom. I think this gap here between 71 and 73 is probably going to get filled if they come out with some type of earnings warning. I could be wrong, and you could go and fill this. Well, that gap's been filled between 88 and 90. I don't think it's a bad business to get into, though. Honestly, I use Venmo. Love Venmo. They own Venmo. Love Venmo. I use PayPal. I I mean, honest to God, I don't think it's a bad business. It's just been poorly run. Uber released their earnings. Lyft is coming in after the bell. And you're seeing kind of weakness into this earnings. You're seeing the dovetail. $10 buy-in on December 29th. You're trading at 16. You got all the way up to $18. So you made 80% on your investment here. I think it pulls back to the 200-day. I think they just come in with some type of craziness. I don't think that they're as profitable as Uber. I think Uber saw some Uber Eats stuff. I think Uber just has a better business than Lyft. Honest to God, I think it's just better than business. Another one that's reporting after the bell that you may want to invest in, but again, I think it's had its run, is Expedia. $86 on December 27th was the buy-in. You've got this gap here between 94 and 96. Yeah, I mean, you could buy into the strength in the travel industry. And when we look at Expedia, we've got a 42 PE. So it's a huge PE. It's up 35% year to date. I mean, you better have some incredible numbers to guide you towards that. So I would bet on the other side. One scan came up, and it's ironically, if you're going to put money into Boyle and you think that natural gas is going up, the one cross up that we had, EQT. EQT, it's probably going to come in with a price of about $31. You got confirmation above the 9-day. You do have your earnings coming up February 15th. The RSI is coming off of a level of 34. It's currently at 45. So it's in no man's land. You've kind of just been, the MACD has just been floundering as the price is just cratered. It's cratered all the way from 42 down to 30. Do I think that it's going to go back up? I mean, natural gas, they just don't have pricing power. And that's what this is into. You look at the PE of 6. It's a fairly expensive for an energy company that's in oil, and it's 100% natural gas. EQT, upright side, is a natural gas production company in the United States. Natural gas is sliding in the United States. Insider sales in November, everybody was selling at $42. Everybody was selling at $42. I don't see one buy here at 30. Why aren't they buying the stock as it's sliding? So I think that's enough of an indication. Now, you do have confirmation at 31 here. Maybe they were in their blackout period. Maybe they couldn't buy it. But you're seeing it move from 34 down to 31 within the past couple of weeks. I do think it's an interesting one. So there you got it. Just a quick one. Hopefully you guys listen to this. If you have any questions, hit me up. If you made it this far, hit the 5 stars. If you also made it this far, just go and subscribe on YouTube. Again, gentleman's agreement. If you have any questions, hit me up on the socials. I will talk to you guys tomorrow. Export song to disk. Ofertas. Let me look at, what do you want? SOBR? Let's see. I didn't know KDB owns RC Cola. What's SOBR? What the hell is SOBR? I'll look at REI. Sober Safe. What the hell is Sober Safe? 100% a momentum trade. SOBR. They are not making money. Ofertas. They are a non-invasive alcohol detection and identity verification systems. I see in August people are buying at $1. It's currently at $2.31. I would not pay more than any insider has ever paid. SOBR, let's go to Active Trader Pro and I can look at it. Is it a momentum trade? I think 100% this is probably a momentum trade that maybe somebody on the internet said to get into. But Ofertas Orlando, other than hype and day trading, it's not a long-term investment in my mind. It's trading 4 million shares in the 10-day volume. You've got 2 million shares today. It's lost its, nobody's trading it. If your 10-day average volume is 4 million and you're only at close to 2 million, and it's already 230, I mean, you're probably going to end with what, 2.5 to 3 to hype trade. You're better off putting your money into, something that's actually going to make money. These guys aren't making money. I mean, go back here, go to the Safari view. Take a look at FinViz. Year to date, it's up 143%. Fantastic. Great. Love it. But you know what? You're not making money. It's 100%. Return on investment, return on equity, minus 854%. Earnings per share next year expected to grow 78%. You know what else is expected to grow like that kind of thing? Look at Tesla. Earnings per share next year, 38%. And look at their move. They've doubled themselves as well. If their technology is amazing and you know something about it, invest in it. I don't know anything other than the stock. Honest to God. You bring that up. I can't tell you that this company is amazing, that their technology is amazing. I see this kind of thing. The sleeping giant made money 3 times on this run. Nobody ain't even talking about it. Blah, blah, blah. This is all people who are day trading this. They're hyping it up. If you know something about the technology and you believe in it, invest in it. It's a micro cap. It is currently, the market cap is $29 million. That is nothing. The float on this, shares floated, 10 million shares. So over 10, the average 10-day volume is 4.2 million, and you only have 10 million shares floated. So half the people are selling their shares per day. I mean, that's got to tell you something. Again, I don't want to downplay that you can't trade this one. It's 100% a trade. But if you believe in the technology, have at it. In my mind, I'd rather wait until, I know a little bit more about it, but at $128 or $29 million, I don't know. $29 million market cap. Let's go down, and they don't have any revenue. There's no revenue. All they have are operating expenses. They show no revenue. Ofertas, if you can show me that they're actually showing revenue, they're showing no revenue on this. None. So I don't know where their technology is or anything about that. There's no zero on revenue. Values in millions, so maybe they're not making $1 million in revenue. It looks like maybe they're making $100,000 in revenue, but with a $10 million, a $29 million market cap at $2 a share, and you're bringing in $100,000 in revenue. Yeah, I mean, trade it. I just, it's not something that I'm ever going to say, hey, this is one you should actually buy into until they have more revenue, until they're a more sustained business. REI's problem, is the debt. The debt's weighing on this one. It was a great trade, I think, when we got in at 233 and was able to get out at about 252, make your 10% right there. If you got in here at 273, you could have gotten out at even. But this is one that the debt's killing it. Let's look at REI. You look at some of this. Their PE is 2. Earnings per share this year expected to go up by 100%. That's great. Year to date, they're down 11%. They're 57% below their 52-week high, but they're right at their 52-week low. And when you look at this, Roth Capital brought them down to buy to neutral, and they moved it from $4.90 to $7.50 in October of 21. That's just too far back. But here's one from January 29th. 3 penny stocks that will make you a bunch of money. Ring Energy is an independent record results. Ring energy stocks. Energy's just been hard hit, and it's not coming back for some reason. I mean, it's just not. You look at this one. I mean, they have $307 million in revenue. The owner on August 1st, they bought in at $267. This guy bought 1.3 million shares at $267. That says something. You're at $218. He bought up here at $267. So, but their debt's just weighing on them. And I don't see anything necessarily about the debt. It is shorted significantly. So, hopefully that helps Hung. And I wanted to go back and... Was I too negative about not listening to somebody on the internet on that podcast? Here, you're down at 94. I might buy more Google. It's definitely put in kind of a support level here between 94 and 95 on a long term. For Dosh, you better be subscribed. See, here's the crazy part, Hung. So you got this 9-day, you got the MACD crossing down, you got the RSI at 40. You've got the volume kind of picking up, but if you got the volume picking up, but the stock sliding, that's never a good sign. I might buy. If I do buy today, it will be a very small amount because I think that $92 right here is probably going to be closer to the bottom. I just don't think that these tech stocks are done kind of sliding. I mean, if you look at the weekly, again, I talked about this before. The 94 is right where the 200-day is on this one. So I think anywhere between 92 and 90. 94 is probably a good buy for this one. Okay, I'm throwing you to Active Trader Pro, and I am going to Anchor to upload this podcast. Where is my podcast? There it is. 2:35, and I'll get nobody listening to this. Hopefully they'll listen on the way home. Is this a good sound? What's Gosling? No. I like that one. In the back room. In the back room. I'm not leaving yet. I gotta still upload this damn thing. I'm not gonna put it on Twitter. But I am going to quit out of GarageBand. It was only a 34-minute one today. Let's go in Anchor. Anybody have anything else they want me to look at? Anything running? TQQQ. No confirmation whatsoever. Wow, SOXS is down? I'd have thought this would have been up. That makes no sense that this one opened up here. Wait, open 1919 and it's showing down. Ugh, I gotta restart Active Trader Pro. Man, this damn thing. No. Bum, 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 bum. Da, 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 na, 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 na. Restart Active Trader Pro. Weeble notes. Save episode. AMC's a tough one. Because I don't go to movies. And that's the first thing you should know is I don't go to movies. The second thing you should know is I don't know other people who go to the movies. That's the real kind of question. Do you know people who go to the movies? Hung, do you go to the movies? I don't know why I have to do this every time. Let me see. 430. There we go. Right. Hung, you answered your own question. See how easy investing is? So what do I think about AMC? Who's going to the movies? Let's see. What else did I say? Market update 3/29/23. Yeah, Hung, if you don't have the movies, if you don't have time to go to the movies, what makes you think other people do? I mean, again, kind of remember the number one rule about investing is buy things that you would use yourself. And because if you're using a product or a service, likely other people are. If you're not using a product or service, what makes you think that other people are? I mentioned this in the podcast. I own Pepsi and Coke. I am addicted to fucking soda. I talked to my friend about it. I am addicted to soda. If I had a fountain drink machine in my house, I would be 4,000 pounds. I would be that dude that just sits in his bed and needs a hole cut out in the bed for bowel movements. I would be that guy because I love soda that much. I love it. I just love it. Google, Microsoft, NVIDIA, AI. I am not putting those in. I'm going to put AMD, Disney, Netflix, HD, Pepsi, Coke, PayPal, Lyft, Expedia, and EQT. We're going to take this. We're going to copy this and then publish now. Boom. Hopefully people get alerted. And then I'm going to throw it up on Twitter. Boom. Boom. that out. We're going to put this in. I hope I wasn't mean to Ofertas. Ofertas, I don't know if I talked to you before, but you just have to realize, man, sometimes on the internet you can't just follow people into a position. See ya, Hung. Take care. I'll be on tomorrow, I think, unless I get the desire to go back and hike again. I do love hiking. This is my work. That's the ironic thing is people, I've been lucky to get to this point, but I do consider this to be work. Tweet, and we got that up. Twitter, and the fucking logo's not showing up again. I hate Anchor sometimes. Anchor, you're gonna be the death of me sometimes. We're gonna put down SPY, TQQQ, QQQ, SQQQ. I'm gonna put up HPCO. I don't even know what that is. Bed Bath & Beyond is tanking. Google's already up there. Ford, SOXL, CS, Affirm. I have SPY. Amazon. I think I have Amazon in there, but I'll put it anyway. SOFI, SLQT, AAPL, Uber, UVixy, AI, LabU. AI is way down. Okay, we'll just do that. What the hell? I don't care too much about this one. Ooh. Huh. I don't even know who you are. Okay. I've got the earnings whisper. I will put you back to Safari view. Anybody else have any other questions? Because I'm going to get out of here. I may hop back on and do some live trading at 4 o'clock around earnings. So if you are subscribed, hit your notifications. So I may do stuff around earnings, but right now I'm probably going to go take care of my sick dog. She's had the poopies. So here, the reason I'm not buying, here, Google. The reason I'm not buying right now, the daily volume is trending down, which it always does in the afternoon. The MACD is kind of up here. It's not making a move. You don't have a confirmation above the 9-day, which is that green line. 9 and the 21 are kind of in these Bollinger Bands. It's just kind of hanging out. And when I go to a long view of it, and I look at Google against our 4-hour algorithm, I see it's going to get you out on this candle. And so the algorithm won't get you back in until we have a move a little bit higher. If you look at the 65-minute algorithm that we have, which is simply on the 8-day EMA, and you look at this, I think $93 to $94 is a good one, but this one doesn't even have you in because you're not above the 8-day. In fact, do I have an 8-day? I don't think I have an 8-day. I'm going to add in an 8-day. Although, no, because it's gonna do the 9-day. I like the 9-day. But I'm not even confirmed on that one. So my guess is that at some point in time, you get down here to the 92 range. And that's what I'm waiting for. So that's why I'm not buying Google. Disney, I think I'll probably buy more in the 100 realm. It's trading right now at 111. Here's the 4-hour, or I'm sorry, this is the 65-minute candle. It's got you out with a 0.77% gain. This got you out, February 3rd. It's ironic. 111.28 was the price. That's about what I paid for it, but not much more. But the markets are in downward trend. I mean, your NASDAQ is down 0.6. Your S&P is down 0.5. Let's see. Indices check on my personal portfolio. I'm probably down about 0.7, I would think, is where I would be down. Cooper, let me look at that. I'm down 0.5. So, Lucid. Lucid is interesting because the Saudis are talking about taking it private. My guess is today some type of news happened. Because if I look at Active Trader Pro, this is Lucid right now. So it is down from 1170 to 1039. Lucid announces 7,500 EV credit on purchase of select Lucid Air models. Wow. Do they really have a 7,500? I thought you had to be under $100,000. Hold on. Let's go and we'll look at Lucid. Oh, no, I don't want that. I mistyped it. My dyslexia. So Cooper, Lucid, LCID. First off, they're not making money. Be very aware of that. This is a capital intensive business. January 23rd, Citigroup with a $12 price target. Lucid was having a better year than Tesla, then it cut prices. That's what happened. So yes, Lucid announced we are going to get into selling our Lucid Air. Oh, stop. Which I'm going to go and look at Barron's.com, PR Newswire. This one's not going to put me up against the paywall. So Lucid announced 7,500 EV credit. We think our customers still deserve a 7,500 credit for choosing an EV, said Lucid's vice president. Touring, the quintessential sports sedan, Air Touring is at the heart of Lucid Air family with an extraordinary fusion of performance design, Grand Touring, Lucid Air complete line, pure from $87,400, $92,900 with all-wheel drive, 410 miles, all-wheel drive. Touring is 107, Grand Touring. I need to find an article where it's not going to put me up against a paywall, but I think all these Barron's articles are going to put me up against a paywall. Yeah. And let's see if the Wall Street Journal puts me up against that. That's your reason, Cooper. They cut prices in order to get the $7,500 tax credit. And I don't have a membership. That's going to put me up against the price wall as well. And when you cut prices, Lucid was already having rumors about... Lucid was already having questionable demand because their cars are so expensive. And as an electric car owner, the problem with Lucid is that it's the charging network. Charging network sucks for any other car other than Tesla. And the Tesla, fanboys, I don't consider myself a fanboy, but I do consider myself, what happened? I do consider myself a Tesla enthusiast and an EV enthusiast. There we go. It finally came up. Let's see. Oh, this is not going to work. Let's go back to trendspider.com. We'll launch it and we'll close that one. We'll go to the default workspace. And so essentially, and by the way, Cooper, see what I did there as far as the research goes? It's not hard to figure it out. FinViz will tell you everything you ever need to know. But here on the 4-hour chart, we got you in at $66.60 on December 29th. And it climbed. I mean, it went all the way up to this candle goes to 1780. So you doubled your money, well doubled your money if you played this one right. During that candle, I probably would have sold at 15. This was the day that it was announced that the Saudis might take it private. And so it just shot up. It's since sliding back down. I would expect it probably to wind up at about $8. Probably between 7 and 8 is where I would think it would wind up. Let's see about our 65-minute candle, our day trading algorithm. I love you. What are you licking? You better not be licking your butt. I know you're sick. I'm not talking to a kid. I'm talking to my dog, by the way, just in case you're wondering. Our 65-minute algorithm gets you out at 9:30 this morning with a little bit of gain, but it avoided you for the whole afternoon. No, man, it's 3 o'clock. It's not close to time. You still got an hour and a half before you eat. No, ma'am. Go. Hey, go. Good girl. I love you. Cooper, does that answer your question? You know what's crazy? Here's what's crazy. This is nuts. Yeah, I don't know if it's right. It's probably not right. I'm not going to repeat it. Some of the calculations might be wrong. But Lucid is one I would not buy. I'd buy Tesla. Honest to God, and here's, let me move this over here. This is why. Lucid, your price to sales is 53. Your price to sales at Tesla are 7. Which one do you think is a better investment? Tesla with price to sales at 7, and price to sales is, here, let's go to investopedia.com. And price to sales. PS ratio, what is it? Price to sales is a valuation ratio that compares a company's stock price to its revenues. Oh, okay. Here. You want this? Here you go. There you go. Good girl. Good girl. You've got enough room. Push her out. I got 2 dogs who need to fight over the blankets. Is GNS getting halted? Yeah, Cooper, I would say everybody thought Lucid was going to be the next Tesla. But the people who were thinking that were not looking at the valuation of the companies. Tesla is just a better investment with a company that's currently making money. Lucid is a worse investment with a company that's not making money and may never get to profitability. But let me go and look at GNS. Because GNS, Cooper, I trade GNS. In fact, your boy lost on GNS. No, it was MGSM that I lost. It looks like it's trading now. Let's see, 5-minute candles. You have confirmation above the 9-day. This one, wow, this one's moved since God, that candle's at 225 and you were trading at 484 and now you're at 569. Hold on, I got to check my dog real quick. You okay? There you go. I know. I hope you're not throwing up around here. I'm going to give you rice. You get rice for dinner. 569 on GNS. Here's the problem with GNS and Cooper. If you're trading as a retail trader, kind of as a momentum trader, great, trade GNS. GNS is not worth $5.65. This has a market cap of $134 million. You go over to FinViz and you look at GNS and they have 10 million shares floated. So that means in the market, they have 24 million shares outstanding, but only 10 million are in the market. 10 million are sitting in executive ownership, whatever you want to say. They are trading on a 10-day volume, 27 million shares a day. That means shares are changing hands 2.7 times a day, all 10 million. It's a 100% momentum trade. This has no value in it whatsoever. Now, what I see here on this chart is I see the price moving down, and you're outside the Bollinger Band. It had to come back up. It came back up big. But now it's above. You've got the confirmation. Ooh, this is a triple bar right here. Yeah, that's a triple bar. Right here, buy in at about 560. Yeah. You've got some pretty good confirmation here at about 567 because you haven't gotten out of your triple bar yet because you haven't broken the 9-day confirmation. I think you could move to 580. But it's moving down. I mean, there's pretty good volume down on this one. Okay. Rather than watch this, I think I'm going to go take care of my dog. She needs me a little bit more than you folks. Thanks, you guys. If you haven't subscribed, please subscribe. Just hit the subscribe button. Hit that like button before I go. I'm on here pretty much every day, if you guys didn't know, trading stocks and doing my podcast. So it is not, I'm not going to make you 500% in a day. I'm not going to make you 600% in a day. I am fully fundamentals and some momentum. But fundamentals is what rules my world. I am more of a swing trader, a buy and holder. In fact, I'm seeing all of these down stocks in the core portfolio where I'm like, God, I'm going to get all these on discount. You know what's traded really down is Meta. Meta is down 3% today. Hey, Steven. You too. Meta doesn't have any confirmation, hasn't had confirmation all day. So remember I said GNS had some great confirmation above that 9-day? Look at this in comparison. Meta has no confirmation whatsoever. Now, if we switch back here and we look at Meta, and this is our day trading 65-minute algorithm, you can see that Meta is starting to cover the 153 to 180 gap here. If we move to our 4-hour algorithm and we look at this one, this is the main one that I use my podcast on, my 4-hour algorithm, that if you subscribe to TrendSpider, I just give you access to this. Same gap, 153 to 183. Same gap. You're going to cover this. You're going to be able to buy Meta at 153. Just guarantee you. If we go back to the last gap, I said that Meta was going to cover this gap right here. There's another gap up above, by the way. but it was going to cover this gap on this current run that it was on from 118. I said, once it passed that 200-day, I said, you're going to cover this gap to 167, watch. And it did. Earnings were a blowout. They're spending far less money. Boom, you covered that gap. It's coming right back down. It is coming 100. I'll look at USAS, but it's coming right back down. Right back down. Here's the thing. Once you cover that gap, this gap's right in play. All the way up to 323. What's USAS? Let's see. USAS. American Gold and Silver Corporation. I'm going to go to FinViz and look at USAS. It's a materials company. It is not making money. They have no PE. Down 8% year to date. They got an upgrade in November of 2021 from sell to hold. Exceeds guidance range, blah, blah, blah. Gold and Silver, together with its subsidiary, engages in the acquisition, exploration, development, and operation of mineral properties in North America. It explores for silver, lead, zinc, copper, and gold deposits. The company holds 100% interest in the Kosala operations, consisting of 67 mining concessions. So it's a mining company. It's mining for gold and silver in the Americas. That chart doesn't lead me into, oh my God, this is a great one to invest in. And if you want to see it, go to finviz.com. That's where I'm at. Let's look at our algorithm. You had an ascending triangle here at 51 cents. It's a penny stock. I don't see any momentum on it. I have no reason to think that this 200-day is any kind of support right here for it. The RSI is at 24. It's completely oversold. It's not making money, Brian. Stock prices on 52-week low to high, they don't mean anything. I mean, this thing's losing money. It went from losing 4 cents a share in August to losing 12 cents a share in November. If you want to bet that, oh my God, it's got to bounce up because it's at its 52-week low. Well, if they lose 36 cents, because that's where they're going, to lose 36 cents on their next earnings. If you want to bet on it and play momentum, I don't even see any momentum on it. Honest to God, when I look at the 52-week range, the 52-week low is 37. The 52-week high is $1.31. You're still 40% above your 52-week low. So you're right in the middle. I don't even see financials on this thing. Here's our 4-hour algorithm. 65-minute algorithm. This is a day trader that we use. This thing on, let's see, this is crazy, but 1,000 candles, which is about 6 months, you'd make 15%, whereas buy and holding would lose you 26%. You win 35% of the time. So you got a better chance of betting on the Chiefs this weekend. Your average win is only 3.95%. So if I were taking your money and putting it in here, I'd bet on the Chiefs this weekend. I think you have a better shot of that one because Jim Cramer likes the Eagles. Look at all this. I mean, this is a mess of a chart because it gets you in and out so many times, but it doesn't move. It's beta. It doesn't even have a beta score. Average true range is 0.04. Yeah, finviz.com. I mean, listen, that's not a way. If you want TrendSpider, I get money off of TrendSpider. Finviz.com is just a great one. But Brian, honest to God, I don't want to, tell you that you're crazy, but I think you're crazy. Looking at the chart again on the 4-hour algorithm on this one, America Gold and Silver Corporation. I mean, here's the other thing, Brian, that I'll tell you. You look down here, this is where all your insiders buys are listed. Nobody's buying this one. There ain't one person in the company buying stock. And I don't even see chatter too much on here. I just see hype. Let me see. SEV. What's SEV? Sono Group. This isn't the... They do have financials. So they're making about $200,000 in revenue. Is this making an EV? Operates a solar mobility solutions provider. The company, through its proprietary solar technology, integrates solar panels into vehicles' bodywork using energy captured. Oof. Boy, Steven, you're pushing the envelope on this one. I mean, I see a statement like this, and I hope you can see this on the right-hand side. Go to finviz.com and type in SEV, and you'll see this statement. Only some days left until the big Kraken is going to be released. Sonos will be the next 10 times bagger, in my opinion, because soon they will be released that their first solar electric car is saved, and the share price won't stay at 9 cents anymore. Here is my take on this one. Knowing what I know about energy and what it takes to power a vehicle forward. Even Elon Musk had said, if I put solar, I may get 1 mile, but on I think he said in a week, you might get 1 to 5 miles of range on a solar panel. The amount of the amount of weight that it's added takes that immediately away, and you don't get solar energy while you're moving because those capture things are too much. So I think this was a company that was created probably 10 to 15 years too soon. September, Wedbush, neutral, $4 price target. You're trading at 89 cents. That chart doesn't instill confidence in me. And here's what you have to know, Stephen, too. Remember, we're still in a rising rates environment. So a company that's not making money, a company where their price to sales is 795. I'm not saying it can't come true, but if you're telling me that this is 100% just a solar car manufacturer or truck manufacturer, I can't see it happening. Because who's putting solar panels on their trucks or cars? Because the upkeep of those is next to... I've had to replace my windshield on my Tesla 3 times. Imagine if I had solar panels on that thing. The rocks that would hit it. So I don't want to say no, but then you go to this... I'd rather see you, by the way, in the speaker company, Sonos, rather than Sono Group. But look at that. I mean, you're just sliding, and it's you go from losing $1.75 to all of a sudden losing 39. Well, that's still not good for the market. The market still beat them up for losing 39. Then you lose 48, which is even more, and boom, all of a sudden you go down, and you lose 50 cents. What makes you think that this one on February 27th isn't going to be losing like 80 cents? You know, the algorithm here, this is our 4-hour algorithm, got you in at, what's this? Let's say. It looks like about 87, and it got you out here with an 11% gain. So it doesn't mean that you can't trade it. Just realize you're buying into a company that isn't making money. That, do I think that is going to be a $2 stock at some point in the near future? No. Their cost of capital is going up because of rising interest rates, and it's just going to be too much for them. Again, if you're putting money in here, you are much better off betting on the Chiefs this weekend. And sorry to be so blunt with you guys. I know some of you guys are new, but I am much more a big tech. Invest in something that's actually making money, that has cash on its balance sheet. You can take something like Capri, which announced last night, CPRI. This is a clothing company. Here, CPRI. Type it into FinViz. They've got a 9 PE. They're making money. They're down 14% year to date. They make apparel. I think this is like Louis Vuitton and stuff like that. Hey, Steven, hit the like and hit the subscribe button. Just do me a favor. You never have to watch me again. Just hit the subscribe button. That's your tip for me. But Capri, I mean, look at this drop from 48 all the way up here to 60. I mean, think about that kind of drop for a company that actually saw an increase in earnings. They just guided a little lower based on demand. Well, in my mind, I'd rather put money into this one because they're making money and hope that they get back up to 60. But I'm not buying them until that 9-day, they get some confirmation above that 9-day. That's kind of my thought on it. But again, I'm a boomer, man. Most of you guys it's 3:30 in the fucking afternoon. Most people have a job. I don't. I'm retired. I trade, but I try to invest more than I trade. So, Brian, man, high five. I went out for a 12-mile hike this morning. Didn't do my normal morning podcast. But I'm glad I'm teaching. And that's if you guys are new here, that's what my podcast is about. It's trying to teach you guys. There are more millionaires made with buy and hold than trading. There are more, billionaires who become millionaires based on trading, not buy and hold. Buy and hold is a strategy that you absolutely 100% should learn. For instance, I look at Google. Look at Google. They're down 5% today. They were down 5% yesterday. Yeah, Christian, I think you have a job, but you're still a degenerate. But look at Google. RSI is down at 40. This one could come down here to 80. But 5 years from now, do I care if I bought at 87 or 94? No. I bought $5,000. Well, what did I buy? $2,000 of this yesterday. Christian, I did that for 30 years. I had a regular 9-to-5 job, but I would trade and I would invest and I would look at charts. I would do, watch the market pretty much nonstop. Now, Google's an interesting one because while my algorithm works, my algorithm plays in the middle territory. So say you have a stock that's bouncing between 80 and 100. My algorithm might tell you to buy in at about 85. Probably would tell you to sell at 95 after it hits 100. So it's in that kind of middle ground. So it underperforms a bull market. It overperforms in a bear market. And Google has been in a bear market. But over 1,000 candles, which this is 2 candles. So this is 2 years. So it goes back to 2021. Google was in a full-on bull market. So my algorithm winds up losing you 10%, whereas buying and holding would lose you 4%. So, and if we move this to a weekly chart, and I did this on my podcast, but if you look at a weekly chart of Google, man, you haven't hit that 200-day since COVID. And that 200-day, you're breaking it right now. What makes you think that you're not going to be back up here in the 150 range? Again, if we're going into a recession, maybe you come to 114 or 115. Again, it trades on future earnings. They're getting hit because they had a bad presentation on an AI thing yesterday. But, okay, I said I was leaving about 20 minutes ago. I'm actually going now. I will talk to you guys later. Again, if you're new, hit that subscribe button. Hit that thumbs up. I am always here. And whenever I'm on, if you want, hit that notification button. Because if I'm on, there's usually not a ton of people in here. And I'll look at a stock for you. I have no problems looking at stocks and making sure that I'm trying to do my best in guiding you. But just realize any douche on the internet, He's just giving you, there's no way to tell exactly where it's going. Like Snowflake, man, Snowflake, I should have been buying this one at 140 the entire freaking time. 135 down here. You're at 160. I mean, you know, are you upset when you bought this at 180? Now, there's a gap up here between 182 and 187. It's going to get back there. I'm telling you, it'll get back there. This is just buying on sale. Think of this as your 20% off holiday sale. So